What's going on, guys? So we are going to recap one of the trades that I took today. Today is Monday. I think it's July 10th. Yep, Monday, July 10th. Okay, so we're going to wrap up and just recap one of the trades that I took today, and that trade was on HEB. Unfortunately, I didn't win much, but it's still a winner. I ended up walking away with 0.06% profit. I'm going to show you what I really did wrong, what I could have done better, okay? So this is basically a break-even trade. This is one of those times where I guess you could say I did get a little greedy, hoping for a bigger winner, when I could have just easily locked in 5%. And 5% on my $500 challenge that I'm doing with Robinhood, that's huge, okay? I mean, 5% is really good, especially when you're dealing with 500 bucks or a little more than that, right? So the way I know that I need to start looking at this is, 5% is a lot of money to make back on $500, especially growing that small account. You can't be expecting 10, 20% winners every time, and those ones will come. And this is something I stress a lot. I'm pretty good at it, but today I obviously broke some of my rules and I failed. I still came out with a little bit of money on top, barely anything, only 31 cents. So let's go over what I could have done better, why I got in the trade, where I got in, and just wrap up like we usually do on these trades, what we do better or what we can do better and everything that we did do. All right, so HEB, why did I play it? Well, for one, it was moving up pre-market on pretty good volume. That's something I like to see. Now, it was up kind of a high amount, it was up pretty high, and sometimes when stocks are up so high pre-market, they tend to sell off a little bit. Well, this one didn't do that right out of the gates. It kind of fumbled around a little bit. But what I was looking for to play was the break above the pre-market. Well, that's not the pre-market high. The pre-market high was right here. I said I want to get in on the stock once we break above the pre-market high for a continuation or potential run-up. I literally could have done so much better on this. It blew my mind. I still did pretty good with my entry point and everything, so I was pretty spot on. Okay, so let's zoom in a little more. So my entry point, like I said, I wanted to play the break above the pre-market high. Well, when the stock opened up, I didn't get in. It didn't break above pre-market. I still didn't get in on this candle. We broke above pre-market, but then we shortly came down right after it. So I waited for the next candle. Was the next candle going to open red and drop down, or was it going to open green and continue upwards right above the candle? And sure enough, that candle opened, and we ended up going right above the pre-market high. So I sent in my order. I believe I got filled. I'm not exactly sure where I got filled, but right in this candle I got filled. And I wrote it up, and I was up about 5%. So from here to here was about 5% that I could have locked in. I wouldn't say that it was greed that really got me, but this is what happened, okay? It was a little bit of greed. We go up, we're up 5%. That's pretty good, especially on a little $500 account. And then the next candle opens up red. I didn't sell as soon as I seen it open up red because I figured with the kind of volume and the kind of play we're seeing on the stock, we could easily see a 1-minute pullback and continue to go. Well, we did have a 1-minute pullback, but it wasn't clean, okay? So I got in here, or I didn't sell out when the candle turned red. Me personally, I was hoping to see like a little micro pullback and then a continuation up. That follow through did not occur. What ended up happening is the candle broke red and we fumbled around a little bit and then it just sank. And I just broke one of my biggest rules here too. I sold as soon as it basically engulfed this whole candle and I walked away with just a little profit. I could have been a little bit more patient. Now, a lot of times it is good to get out when the trade starts turning against you, but there was 2 supports that I basically missed. I did not pay attention to because I seen it get red. I got very impatient. I got a little nervous. So I closed out my order before it became a loser. Okay? Yeah, that's good, but there's 2 things that I missed here. Is that we had the breakout right here. This was old resistance pre-market. Old resistance becomes new support. Look where we bounced after the red candle. Right off the old resistance and the breakout. The breakout and the old resistance became new support, and I bailed right on support of the breakout and the old resistance and the 9 moving average. I'll zoom in a little more. So if you look here, The white line represents where my entry point was for the breakout. That line was resistance pre-market. Old resistances become new support. My moving average, the 9 moving average, crossed right over that breakout line, which is basically where that red candle stopped. If I were paying closer attention and just was a little bit more patient, I could have ended up locking in about 8% on the pullback. I was right. There was a pullback that occurred. It wasn't the cleanest pullback, but there was a pullback that did occur. But what I missed, I got a little greedy. As soon as this candle turned red, I didn't sell my position, which I should have. If I would have sold as soon as this candle opened up red, I still would have locked in probably around 4%. Next thing, I got a little impatient and didn't pay attention to my indicators. I was strictly so tunnel visioned on this red candle that it made me nervous, and I just sold out as soon as we dropped down. And the two things I miss is that old resistance becomes new support, and we are right on the 9 moving average. It was kind of foolish of me to sell when the candle basically touched the 9 moving average because that is a support. I basically sold on support. If the candle would have broke through the 9 moving average, that would have been a better time to sell. Yeah, I may have lost 1% on the trade as soon as it broke through, but I was giving myself a better chance to make that profit because I sold on support, and that's something that I do preach and something that I do teach, and today I broke it myself, and that's just the nature of trading, and it does happen. Okay, so that pretty much wraps up my whole trade for today. We're still technically green. I didn't lose, but I didn't win much, so I didn't really do anything. I basically broke even. So those were the things I could have done better. Locking in my profit when I had it and I seen the trade starting to go against me. Second thing I could have done better is once the trade did go against me, where was I sitting at? Was I on support or was I breaking through support? In this particular time frame, this situation, I was sitting right on support when I sold. And the stock ended up going back up. Not a lot, but it did. So once I basically lost all my profits in here, I should have known that I'm sitting on support. If we break through that support, then I'll sell. And I didn't. And next thing you know, the stock goes back up, and I could have ended up locking in a total of about 8%. If I sold on the tippy top. Probably more so 7% winner. So things to pay attention to is just don't be tunnel vision when you're trading, and just make sure you're paying attention to all of your indicators. Maybe this wasn't the best stock to play today, and that happens. Sometimes we pick the stocks that aren't the number one winners of the day. But even so, even with that being said, even if we don't pick the best stock to play for that day, there is usually still some room for profit. And what I need to do, and what anybody watching the videos need to do, we just need to remember whatever trade that we take or whatever thing we take, we need to we need to be patient. We need to trade the best setups. We need to have a plan going into the trade. We need to execute that plan. Make sure you have mental or, stop losses in place. Know where you're going to exit if the trade goes against you. And lastly, the way I like to think metaphorically about trading is honestly, it sounds gross, but I'm kind of like a leech, okay? When it comes to trading stocks, I just want to get in on the stock and I just want to suck as much money from that stock as I possibly can before I get out. Not being greedy, but that's the way I would like to look at trading stocks. I'm like this leech. I see the momentum, I see the pattern, and I just want to come in for a quick suck on that trade and just take out everything I can and just rip the blood out of it, essentially. Rip the money out of it and go. Just walk away. Okay? That I didn't do today. That I got a little too greedy. I was like a mosquito. Okay? I kept sucking the blood, and then boom, I got smacked and then I got crushed. Okay? That's a good way of thinking of it. Be the smart mosquito. Come in, take your blood, and run. Soon as you notice the hand coming down to smack you, get out. I didn't do that. I seen the red candle. I didn't get out. I didn't pull out when I seen that first red candle. So that's something that I'm obviously going to be practicing on. And the nice thing is that I make all these videos, so I can always go back and I can retrace my steps on every single trade that I take. So that's kind of wrapping up, I don't know, maybe day 4, day 5 of the $500 to $1,000 goal. We'll get there soon, but, time will only tell. So thanks for watching. I hope you guys like that informational video.